Good morning, everybody. Welcome to this morning's Miller Johnson webinar related to the COVID-19 outbreak and epidemic. Today, we'll be talking about liquidity issues and tax credits. Within the liquidity discussion, we'll be talking about some of the small business loans and grant programs that are out there that may be available for small businesses as well. As we like to say at the beginning of each of our webinars, to reinforce for clients and others who may be listening, our view at Miller Johnson is that we can best help clients and the community mitigate the fallout from this crisis by working together, whether that's with clients, government, community organizations, or other professionals. We know that our community prizes collaboration, intellect, loyalty, candor, and ingenuity, and these are really our guiding principles each day as we guide through and navigate these uncharted waters. We can always say that we don't know what's coming, but we can adopt a constructive mindset that recognizes our shared sensibilities toward coworkers, employees, business partners, local economies, and the principle of law. With that said, we'll briefly touch on a few of the developments from the last 24 hours, as we also do at the beginning of our morning webinars, to have a general update on where things stand with respect to COVID-19. As probably everybody on the call knows, yesterday, Governor Whitmer issued a stay-at-home order and an order that directed non-critical infrastructure businesses to suspend physical operations. That's effective now, became effective at midnight. Michigan is one of 15 states with these types of stay-at-home orders, and another 4 states have ordered all non-essential businesses or non-critical businesses to close. But 4 of those states have stopped short of issuing official stay-at-home or shelter-in-place orders. Michigan is among the top 5 states now for confirmed coronavirus cases. As of yesterday evening, there were 1,328 confirmed cases with 15 deaths in Michigan. For the first time in the United States yesterday, there were over 100 deaths due to coronavirus in a single day. And on the legislative front, at the federal level, there continued to be sort of a stalemate or brinksmanship on the federal stimulus package, what we call the Phase 3 federal stimulus package, with several votes coming up short. And I know that there's some optimism coming out of meetings well into the night last night that there will be an agreement, and I haven't checked the news within the last half hour in preparation for this webinar, so that may be breaking while we're on the call. Hopefully it will be. So that's where we are. There will be more to report out, as I'm sure we'll get additional programs and details that'll come out of that federal package once it is approved. So why don't we move into our program today. I'm Erik Daly. I'm a partner in our corporate group here at Miller Johnson with a focus on mergers and acquisitions. And also on the line is Neil Williams, who is in our corporate group and who is a tax partner. The focus of our presentation today, as I mentioned, is on liquidity issues and tax credits. And our agenda as it relates to the liquidity issues breaks down into 5 pieces. Really understanding your priorities and ranking your priorities as it relates to liquidity and payments. Related to that is organizing your financial information hopefully you have a process in place for that already, but that may need to be intensified depending on what kind of a cadence you establish with business partners or lenders or others in connection with evaluating and communicating liquidity issues. Communications and how that may change going forward for some period of time here during this distressed situation. And we'll talk about assessing all options that may relate to alleviating liquidity concerns in the short run. And then I'll finish by talking about some of the government disaster relief programs at the state and federal level that may be available for certain businesses before Neil talks about the tax credits that I know are a focus of a lot of questions and uncertainty right now. So we'll try to bring some clarity to that. So know your priorities. We'll cover this briefly. I'm sure as business operators is something you already do in the course of your business, but of course now it's as important or more important than ever. The first step, obviously, in this type of situation is to identify who your essential constituents and payees are, and say that's changing somewhat as government takes different actions and private institutions implement different programs. And normally, certain tax considerations and payments would fall into this essential payments bucket, although, with extended deadlines for certain tax payments and deferrals, which Neil will touch on later, take some of the pressure off of certain tax payments. Obviously, lending partners, although again, there may be some flexibility to manage outflows that you wouldn't normally otherwise have in the ordinary course due to flexibility programs that certain banks and credit unions have implemented. And then moving to kind of your next tier or somewhere in between essential and next tier, you'd have things like minimum purchase requirements, utilities, and then obviously employee payments for making sure that you continue to staff at the levels you need to operate during this time, although that obviously is also an area where businesses are evaluating what kind of flexibility they have and what kind of staffing they will need in light of the executive orders that have come down in different states and the overall economic situation. The next tier, you got to consider your key partners. Who are the, for example, suppliers that you really cannot operate without, and making sure that you have sufficient liquidity to continue to work with them, and hopefully establishing a mutual relationship where they are sharing information with you about their viability so that you can have maximum visibility into one another's liquidity and financial status to ensure a continued business relationship that's flexible and dynamic given how fluid the current situation is. And then I think the third bullet point here is probably the hardest right now is understanding and making hard choices about, what are really non-essential priorities and what fits into that bucket, the sort of nice to haves, but not essential to continuing operations and really getting to that next day or next week. So things like, are there new lines of business that you've entered into that you can retract from? Is there inventory that is related to a non-core program or asset that you can convert to cash? Obviously, all this is made more complicated by the restrictions on conducting business that are currently in place in Michigan and many other states. And are there other long-term priorities that you can, reevaluate and consider putting on hold now to preserve cash for those those really essential activities. We can move on to the next slide. In this environment, obviously, it's critical to have current and accurate financial information. Daily cash flow info is really critical and key to be able to communicate credibly with your business partners. You may not share all that information with partners, but it really does lay the foundation for being able to have those credible communications with your partners, and then hopefully being able to receive information from them. I would say, we'll get to this, I think, later. The more you're communicating, obviously, you want to be careful about sharing sensitive financial information or business information. So, understanding what kind of confidentiality provisions may be in place, but at a high level, if it's general financial information, I don't think, you have to make your own evaluation, I guess, about whether it's imperative to have an NDA in place, and attorney can help you evaluate that. But the more granular the information, the more you're going to want to think about whether you need something like that. But having current financial information allows you to be more responsive to some of these opportunities that are coming up both in the private and public sector, because without the detailed financial information, you won't have what's necessary to apply even for government disaster relief programs, which do still require pretty significant and detailed financial information. I think there's maybe a misconception that some of the Small Business Administration and other types of loan programs of that ilk don't really require the same level of financial information, and it may not be quite as intense as with a non-SBA loan, but there still is a level of risk evaluation and underwriting that comes along with SBA loans, and so you can't just go in without the right financial information. And at least in the case of SBA loans, that require you to include and have available financial information and tax returns for any 20% plus owners as well, who will be needed to provide personal guarantees on any SBA loans that may be incurred. So we can keep moving. We touched on this a little bit already, but it's very important to establish these communications with stakeholders, broadly defined. And again, just to tie this back with having the right financial information and accurate financial information that you can share with them, it will lay the foundation for being able to seek accommodations for your customers or vendors to feel like they can share similarly sensitive or detailed financial information with you, and to create an atmosphere where it's really more of a partnership, maybe more of a partnership than you would normally have, to kind of weather these times together. Certain instances you might consider sharing some of that information with employees if you determine that there's a level of anxiety among employees and needing to have visibility into the financial situation. A lot of lenders, not all lenders, but many banks and credit unions, as I mentioned, have announced certain flexibility programs for existing borrowers, and of course you can always approach your bank about accommodations and deferrals of payments and forbearance if those are things that you need to look at. I think it's important to emphasize again that you communicate with all of these potential stakeholders before taking on new debt like an SBA loan. It's critical that you understand what flexibility you might be able to create or already have in your current arrangements and relationships before you assume you need to go out and incur an SBA loan, for example. So some other things to assess, what flexibility capacity do you have under existing credit arrangements? If you have a line of credit in place, is there, additional borrowing capacity? We touched on this already, but are there non-core assets that can be converted to cash to help with this short-term, hopefully short-term, but medium-term cash crunch? Can you approach lenders or commercial partners about restructuring payment schedules and deferring payments? And now we'll kind of pivot into the next part of the presentation related to evaluating participation in SBA and other government disaster relief programs. And this last bullet point here about loans under economic stimulus package, we had hoped to be able to talk about the contours of what an approved new federal small business disaster relief loan program would look like. And I think we have some kind of general contours of what that might be in terms of scope, upwards of $300 billion additional dollars. But unfortunately, we don't have much in the way of details for how that would work in terms of actually applying for loans, how those would be administered and the like. So why don't we talk about what we do have a little bit more information on, which is some of these government disaster relief programs. First one that we'll talk about is SBA disaster loans, and there's at least $1 billion available nationally for these types of loans, and they're available to both for-profit and not-for-profit. Not all not-for-profits, but many not-for-profit borrowers. And then after that, we'll talk about a couple of Michigan-specific programs before touching on some other state and municipal programs that might be out there for companies. So the SBA economic injury disaster loans, these are the SBA loans that would be the kind of initial choice or initial option, I guess, for businesses that have sustained a loss in revenue or working capital issues in response to the COVID-19 situation. These loans can be for up to $2 million. The interest rates are determined based on an assessment of the borrower, but they're capped at 3.75% for for-profit businesses and at 2.75% for not-for-profits. The repayment time frame can be up to 30 years. It won't necessarily be that long, but it could be up to 30 years. There'd be an initial 4-month payment deferral, so there would be no interest payments for that first 4-month period at least. And the fourth bullet point here, unlike many other SBA loans that are administered and they're guaranteed by the government but administered by a bank, these economic injury disaster loans are actually funded directly by Treasury. So you're dealing directly with the government here rather than applying through an intermediary bank with a loan that's guaranteed by the SBA. So it's a subtle difference, but it may be an important one just from a timing perspective of getting funds out. The loans for these economic injury disaster relief programs can't be used for certain things like refinancing all existing debt or maybe making large capital improvements, but they can be used for general working capital issues like payroll, other current liabilities, making current debt payments short of a refinancing. And then in terms of security for the loans, any loan above $25,000 will need to be secured to the extent possible. It's not a requirement requirement for these loans to be secured, but anything above 25,000 will be secured to the extent possible, and that would include real estate that might be available to backstop a loan from the SBA. As part of the process for applying, as we mentioned earlier, you really need pretty detailed and current business information, including year-end profit and loss statements, monthly sales figures, information about collateral, and tax returns. So it's important that even if right now you're not considering an SBA loan as an option, it may be worthwhile making sure you have this information available in case an SBA loan application does become one of your options and something that you want to pursue. And as part of that, it's important to understand that any owner with a more than 20% any owner with more than a 20% equity interest in the business is also going to be required to provide a certain amount of financial information, including tax returns, since they'll be looked to as guarantors of any SBA loan. So if you don't have that information available already, it may be worth reaching out to larger owners of the business to make sure that they can provide that information if it's needed, or to get the discussion started about whether that's even something that might be an option or that they would entertain as part of obtaining an SBA loan. The lending criteria, the SBA says is really based on credit history, repayment prospects, and collateral. So, what you would expect for a typical commercial loan. And, I think in the current context, I'm not sure how much more flexibility there is in those criteria than there would be in a regular SBA loan application situation. I suspect a little more flexibility, but the SBA is pretty clear that they will apply a test to see if a business is bankable elsewhere. So if this evaluation suggests that the business may be able to obtain financing from a non-SBA source or from a commercial banker outside of an SBA program, they will redirect the proposed borrower in that direction. On the other hand, if a loan's denied because the business is considered not a good borrower based on these criteria, the SBA theoretically should be contacting the business applicant within 48 hours to talk through that and to figure out if there's missing information or things that might be provided that would change the evaluation. There's no cost or fee to apply for these disaster relief SBA loans, and if your business is approved, you're not obligated to accept the funds. So if you're considering it, it's really more the investment of time while you've got a lot of other balls in the air, as well as obtaining information and going through the application process. That's the main potential cost to pursuing this right now. So some application tips if you do decide to pursue an SBA disaster relief loan. Probably the most important one, because all these applications are being processed online right now, for obvious reasons. It's important to measure twice and cut once and provide consistent information throughout the application process. One of the major reasons for rejection of SBA loan applications is just, maybe you put in a different address in the application than it's included in a tax return, for example. And some of these things just get flagged by the technology that is evaluating the loan application in the first place, and that can slow things down. So it's important that you try to be as consistent as possible and avoid omitting information that's required. Just a technical issue is that, as you can imagine, a lot of businesses are either applying or loading up the data that they would need to apply for SBA loans onto the disaster relief loan website right now. So as you are, as you're working through providing information on the website, if you do opt to go that route, just make sure you save your work so that if the site crashes, you don't have to restart. In terms of timing, if the loan's approved, usually the funds are available within 2 to 5 days after the approval. The processing times are unpredictable right now. I think in terms of setting realistic expectations, we've seen communication saying that it may take 18 to 21 days to evaluate loans, but anecdotally, at least in the Great Lakes region, earlier on in the past few days, many of the applications have been processed much faster, some in just a few days. So it's just an important thing to be aware of in terms of timing. It's not a situation where you apply and then the funds are, in your bank account the next day. So we can keep moving. Okay, so pivoting from the SBA disaster relief programs to Michigan-specific program. These are really focused on small businesses here in Michigan that have been impacted by the executive orders that have limited the conduct of business, and there's up to $20 million available for small businesses that are in that boat, and these funds are expected to come online around April 1st. So the $20 million is split into two buckets. One is $10 million in grants, and the other is $10 million in loans. The grants would be available to small businesses with fewer than 50 employees, and again, there'd have to be a showing of loss from the current coronavirus situation, and more specifically from being impacted by one of the state, the governor's executive orders or other state restrictions on conducting business. And then the other bucket of $10 million is a loan program, which is available or targeted at small businesses with fewer than 100 employees. And the application forms and process details are not yet available. I checked again this morning before getting on the call, and the website still did not have the application information and said that it would be coming soon. But it also did reaffirm that the funds are still expected to come online on April 1st. So that's another program to keep in mind. Not as large, obviously, as the SBA program, and not nearly as large as what we'd expect to see come out of the federal stimulus package. But for very small businesses, this may be a good option in Michigan to consider. Go to the next slide. So in terms of cautionary notes, if you've dealt with SBA loans in other contexts, I think you'll be mindful of some of these considerations already, but you need to understand whether there are limitations under existing agreements. Obviously, if you have existing lenders and existing credit agreements, you need to have granted collateral and security interests in different assets. You need to understand how an additional loan would fit into that, and how an SBA loan would fit into that, if it's even feasible. As I mentioned before, the large owners of the business, those with more than 20% equity, would need to put up personal guarantees, at least under the SBA program. So that that may be a non-starter for some businesses. And as somebody who has most frequently encountered SBA loans in the context of M&A transactions and other strategic transactions. I'll say the general lack of flexibility as it relates to SBA loans and kind of working with seeking flexibility or information even sometimes about payoffs or changing the payment schedule, things like that. It's going to be more difficult with an SBA loan than your typical commercial lender. As I mentioned earlier, there are going to be some limitations on how you can use the proceeds, especially for the disaster relief loan program, and tying that to really kind of working capital issues related to impact from coronavirus. And the last word of caution I would offer is, don't take the SBA loan approval as a given. There's still this credit elsewhere testing that I mentioned earlier to see if your business might be bankable elsewhere, and you've got to go through the kind of SBA underwriting process to evaluate whether your business will qualify and what kind of collateral and terms you would need to take on. So for non-government programs, we touched on a couple of these. A lot of banks have announced programs, or if they haven't announced, they've reached out to borrowers about and commercial banking customers about waiving late fees or working with delayed payments and things like that. So, again, before applying for or before taking on any additional SBA or similar type disaster relief loans, I think it's critical to explore what kind of flexibility there might be with existing banking relationships that you have. And then these are just two examples down at the bottom of the slide about some miscellaneous programs that might be available to small businesses. There are many more things like this, but Facebook is offering a large amount in grants and advertising credits. There's other industry-specific programs, like for the food and beverage industry, micro grants to independent food and beverage businesses. I think Forbes has compiled a pretty good, if you Google, you can Google, or we can send around a link to this. Forbes has compiled a pretty good list of some of these programs that are available in different states and through different private organizations for small business relief. So those are other things you might just want to look at that may not interfere with existing arrangements you have, but could help with liquidity issues and provide some small amount of relief. Okay, we can go to the next slide. So I'll stop there and turn it over to Neil Williams, my tax partner, to talk about some of the tax-specific things that have impacted business liquidity or that have created questions about cash flow issues for businesses. Neil?
Thanks, Eric. A couple notes up front. The first one, this is tax-related, so I think just for the benefit of everyone on the call, I would give the typical disclaimer to talk to your individual tax advisors before you bake anything in this presentation into your plans. I'm covering things at a high level. Our goal is to help everyone be aware of what's out there, but with everything tax related, there are exceptions. I'll cover some of the bigger ones today, but we just don't have the time to cover all the exceptions. And then when we start to get into talking about some of the proposals in the current stimulus bill, I just don't think we even really know what the exceptions will be yet, because the proposals haven't solidified to that point yet, and we obviously won't have Treasury regulations until the bill is passed. The other thing I would say is I'm planning to divert from the order of the slides a little bit. Just trying to work on the fly here and looking at some of the questions that we received prior to the presentation starting, and a couple that have popped up while Erik was talking. It seems like most of the interest right now, which I think is understandable, is on the tax credit for the paid leave provisions of the Families First Coronavirus Response Act. I'm planning now I'm going to tick through everything else, and then I will go back to the FFRCA and FFCRA and cover that for the remainder of our time. I can see questions that people are typing in on my screen. If we get a lot, I'll just do my best to keep up. So feel free if you have additional questions as I'm talking, and I'll do the best that I can to keep an eye on those and then tick through what I can before we get off the call. If you have any other questions, especially questions that are not as focused on the tax credits on the FFCRA, Miller Johnson does have a 10 a.m. call today where two of our employment partners are going to talk through, specifically respond to questions and answers that they received after doing an initial call on FFCRA yesterday. So if we don't get your questions here, that's another option to submit questions ahead of that webcast and dial into that and try and get questions answered that way. Okay, so that said, the first slide that you're looking at now, these are the things that have already happened. So these are the laws and the IRS announcements that are already official as of today. The first, taking through the bullets here, last week, Treasury announced that basically tax day, the typical tax day of April 15th has been postponed to July 15th. That means that returns due April 15th are postponed to July 15th, but more importantly, in terms of a liquidity discussion, federal income tax payments that would normally be due on April 15th for finally determined calendar year 2019 returns have been deferred to July 15th. And also first quarter 2020 estimated federal income tax payments, which would typically be due April 15th, are now due July 15th. That applies to both corporations and individuals on both of those bullets. So skipping over the next bullet, which is FFCRA for now. And actually, before I do that, Michigan, so when we talk about pushing the tax day back from April 15th to July 15th, it's happened for federal income tax purposes. Michigan has not announced that it's following suit yet. Conventional wisdom seems to be that they will, because a lot of the calculations on a Michigan income tax return are based off of the federal return. They use the federal return as a starting point. So it still seems like that will happen. We haven't seen the advice yet, but if and when that happens, Miller Johnson will obviously get updates out to clients as quickly as we can. The bullet at the bottom of the slide, what Michigan has done is last week they announced that sales and use tax payments that would typically due March 20th are postponed 30 days to April 20th. And that applies to any business that paid less than $720,000 in sales and use taxes in 2019. Jeff, if we go to the next slide, please. So moving from things that have happened to what's proposed right now in the stimulus bill, I'll tick through these bullets. Overall, when you read through the stimulus bill and the background information that's been provided by the drafters, you can see that there is a heavy focus on finding ways to get businesses cash now. I think that's maybe opposed to, if you look back at things that were done, as part of the most recent tax reform, or even what's going on now compared to what was done in 2008, there's definitely a more critical focus now on acknowledging that a lot of businesses are about to hit a cash crunch, and we need to find creative ways to get cash into taxpayers' businesses' hands sooner rather than later. So ticking through what's proposed right now, they're postponing that the employer share of Social Security tax payments be deferred, and I missed that they would be deferred for 2020 and paid over 2 years. So what that means is you could stop, if the bill is passed, you could stop or you could continue to withhold your employer share of Social Security tax payments now, but you would not be required to deposit those payments. So the business can keep the cash or the employer can keep the cash. And then of the amounts that you withhold and do not deposit, you would pay 50% at the end on December 31st, 2021, and pay the other 50% on December 31st, 2022. The next proposal is to increase interest expense deduction limitations from 30% of adjusted taxable income to 50% of adjusted taxable income. That 30% threshold was a new rule that went into effect in connection with 2017 tax reform. And so what they're doing, I noted in the parentheses, is they're making this retroactively effective to at least 2019. And what that means is that if your business was subject and you weren't able to the 30% limitation, you weren't able to claim all of your interest deduction and get all the cash tax benefit of those deductions in 2019, you could immediately file an amended return for 2019 and claim the refund that you are entitled to based on taking 50% instead of 30%. The next proposal is to allow carrybacks of net operating losses generated during 2018, 2019, and 2020 to the prior 5 years. The most recent 2017 tax reform, this is another area where tax reform said that you could not carry back NOLs anymore. So there should be depending on results of your business the last 3 years, there should be a fair number of businesses that have NOLs that are carrying forward. What this would do is unlock your ability to carry those back, and similar to the interest expense deduction, if you had NOLs for 2018 and 2019, you could now go back and amend your returns for those years to carry back NOLs 5 years prior and get an immediate refund. The next proposal is to suspend aviation excise taxes. Taking through the bullets, the next one after that is a proposal to allow immediate expensing of certain building improvements. This would mainly impact retail and hospitality businesses. What this is really getting at is fixing what's been called the retail glitch, which you might have heard of if it's impacted your business, which resulted from 2017 tax reform. This is one area, though, if this does apply to you, I would note, from what I've read over the weekend and yesterday, this is one of the provisions that Democrats are currently pushing back on. And then beneath that, the last bullet, there had been a proposal, in the original proposal, there was a provision that would postpone corporate estimated tax payments that are due for 2020 and for first quarter, which has already been deferred, like we talked about, to July 15th, but also for second quarter would be deferred until October 15th. But that has been excluded from the most recent version of the bill that's being discussed. So that's why that's struck out in the slide. Okay, so going back, Jeff, if you could go back to slide 16 now. Okay, so the other thing that has happened is last week, the president signed the Families First Coronavirus Response Act, which requires mandated paid time off for sick leave, coronavirus-related sick leave, and FMLA, and also includes a tax credit. The tax credit is a 100% dollar-for-dollar refundable credit. It's intended to offset the entire cost of providing the paid time off under the Act, up to caps on the amount that you can pay your employees. So the caps are if your employee themselves is sick, the paid time off provision allows their normal pay up to $511 a day for 10 days, so $5,110 total cap. If someone is caring for a loved one, or if someone is out of the office or out of work because they're caring for children who no longer have daycare, no longer have school, they are allowed 2/3 of their normal pay, up to $200 a day for 10 days, for a total cap of $2,000. After using 10 days sick leave, whether it's the $500 or $200 cap, employees can then take extended FMLA that's awarded under the Act. Extended FMLA is 2/3 of an employee's pay, up to $200 a day, for 50 days, so $10,000 maximum credit per employee. The service has already said that they're going to do what they've already made announcements that they're doing what they can to expedite the claims process and allow employers to get cash as fast as possible. One way that they're doing that is that they're telling employers that to the extent that you're still paying any employees while other employees are on paid leave, you still withhold income tax, withhold the employer side of income tax, Social Security tax, Medicare tax. However, you do not have to make deposits of those amounts. And that was, I think, one of the questions that we had before the call was that distinction. So you're still withholding the tax from a paycheck. So if you have an employee, say that earns $100, you still issue them their check subject to their withholding. So they get a check of, call it net, maybe $70 after you withhold. You do not have to take that $30 that you withheld and deposit it as you normally would with your payroll deposits with the IRS. You simply keep the cash. The next bullet down would apply if you're in a complete shutdown situation. So you're not paying employees enough, or you don't have enough ongoing payroll to cover the amount of the paid time off that you're granting and the credits that you're allowed. The service is promised in those cases, it's a fully refundable credit. So you still have the right to get fully reimbursed. And the service has promised that they're in the process of drafting streamlined forms to allow you to submit claims for credits, and that when claims are submitted, the service has promised that they'll issue checks as quickly as possible. One other note, when we talk about it being 100% dollar for dollar credit, and we talked about the caps, the credit also covers what's described in the Act as the allocable cost of providing group health care benefits to your employees. So what that means is that if you're providing group health care benefits that are excluded from employees' income under Section 106, then you can take a prorated portion of your total cost and allocate it to that employee, and you can also include that in the amount that you're submitting in your credit for in the calculation of your credit. There's a placeholder in the Act that says that Treasury will issue additional regulations with specifics on how that allocation will be done. The Act simply states that the goal is more or less to come up with a reasonable prorated amount when you look at your total cost of your group health plan, and then I think likely your employees, and then breaking up based on headcount and whether people are full-time or part-time, and then allocating the total cost in that manner. So again, the goal being that if employers are going to offer the leave provided in the Act, they will be as quickly as possible made whole on the cash that they're paying employees while they're out of work. Another common question we've seen is, does this still apply to tax exempts? And I think I would say for everything, for all the points we've talked about, when we talk about the federal income tax provisions, typically no, because a tax exempt, unless they have non-tax exempt businesses that they run under their tax exempt umbrella, you typically are not paying income tax. However, when we talk about paid leave under FFCRA, that is an area where even as a tax exempt, most tax exempt employers are withholding Social Security, Medicare, and employees' portion of federal income taxes from paychecks. So you should, I would expect you'd have some withholding that you're typically making that you could withhold and then not deposit, so that you would have some ability to take the credit immediately without filing for the refund. That said, if for some reason, if you're tax exempt and you're not withholding, you would still have, to the extent that you provide the paid time off, you would still have the ability to file a refund claim and get cash that way. One other good question that we received, the Act is effective, it was signed last week, but it has an effective date of April 2nd. So in order for paid time off to qualify for the credit. It has to be sick time or FMLA time that's taken after April 2nd or on or after April 2nd, 2020. So I'm not sure why they did it this way, but that is the way that it's written. And that's the answer right now is in order to get the benefit of the credit, you've got to wait until you're looking at people that are out on April 2nd or after. And at that point, you can start to look at the salary and wages that you're paying to those employees on or after April 2nd as the basis of calculating the amount of the credit you can take. And so that's what I had to present on, and I'm just looking now to see if we have any other credit-related questions. So I see one question in respect of the tax credits. Is there an income cap for businesses to receive the credit? There's no cap on business income. There's really no tests at the business level in terms of your ability to, in terms of income numbers, in terms of your ability to claim the credit. The Act only applies to employers with 500 or fewer employees. So if you have over 500 employees, you're not required to provide the paid time off, and you also are not eligible for the credit, but there's no income tax.
Hey, Neil, this is Erik. While you're looking at those questions, there were a couple of things that on the SBA front that I'll just go back and mention to kind of give you a minute to process those more tax-specific questions. For folks who may have worked on SBA loans or disaster assistance loans in the past, it's often been the case that it's a county-specific declaration of a disaster by a governor. In this case, with coronavirus, I just want to be clear, there's no limit on which counties in Michigan or any other state are considered eligible. So it's statewide, just in case that was something you might have thought from past experience that could apply here. It's statewide. And then one other point, and just looking through some of the application tips that I jotted down before the call that I didn't touch on before, is that when you apply for funds, if you end up needing more or not as much in terms of SBA loan relief, disaster relief, you can always request a reduction or provide more information to support an increase in the loan. So you won't necessarily be locked into whatever amount you put in the initial application. So that's something that's flexible if you do decide, after considering all your other options, that an SBA loan might be a good thing to pursue, or at least apply for, understanding you don't need to accept it. And then the last point, which this comes directly from the SBA's website, and I just put it out there as a note of caution as you're gathering information about your business and your financial situation if you're going to apply for a loan through the SBA. But the tip or advice here from the SBA is that if your tax returns, which you'll need to provide, particularly if you're a 20% or more owner, if those tax returns reference other businesses that you own, you must also submit those tax returns in order to avoid a processing delay. So that just underscores the importance of having as much financial information as possible that you may be required to submit if you do decide to go down this road. So again, just in terms of preparing yourself to take advantage of different options, cast a wide net for what types of information you might be collecting. So those are the only additional things I wanted to say for now, Neil.
Okay, thanks, Erik. I'll tick through a couple more questions here that came in. One question was, what if we pay an employee on a commission basis rather than hourly? How would we determine the amount of the credit that they would receive? That has not been addressed. That specific situation hasn't been addressed yet in the guidance that's been issued. However, if you have an employee, what they have given guidance on is if you have an employee that has a variable schedule, so their compensation is not the same month to month or quarter to quarter, then you look at the prior 6 months for that employee and calculate their pay based on looking at the number of work days in those 6 months and the total amount that they were paid, and look at the average pay over that period, and that would be their base pay for purposes of calculating the credit. So I would expect that if someone's paid on a commission basis, the calculation would be something similar to that. And I think at this point, you know, if you've got someone that's going to be out on April 2nd, you don't have advice better than that. The rules have also been clear that they're going to give leeway, and they're going to have a 30-day enforcement hold for good faith attempts to comply with the act. So if you're in that sort of position, I think that's the best you can do is look at that 6-month guideline and work off of that. And then another question I got is whether the group health insurance credit is subject to the same dollar cap as the paid leave, and it's not. So when you go through the caps and you say, for example, if someone themselves is out of work, then their credit under the act can equal the greater of their normal pay, or $511 a day. If you're offering group health care on top of that, then that person's credit would equal their $500 personal cap plus their prorated share of your group health care coverage. And I see some other questions that are more specific on things like what if someone's already laid off, or what if we're already closed? And then, you know, what if we've closed already and we're waiting for April 2nd to hit in terms of taking credits under the act? I'd recommend people dial in at 10, because those are questions that Kathy Tracy and Jeff Frazier, who are going to be leading the call at 10, are in a better position. I've been following the tax credits, but they're the ones that are following closer when exactly people do and don't qualify in those less certain situations. So if you can, I would recommend dialing in at 10 o'clock, and I think you'll get answers to questions along those lines at 10.
Right, and it looks like we
wrap up.
Yeah, sure, and thank you. It looks like Amy has already posted a link to the registration from our website for that 10 a.m. program, which will address some of those issues. Amy, maybe we can also link to the replay of yesterday's. Okay, there it is. Well, let's see if we can link to yesterday's program as well. I do think some of these questions were partially answered anyway, based on the information we had yesterday. So if folks haven't had a chance to look at the replay of the first part of that program that we had yesterday morning, that's available on our website, and we can link to that in the comments. So with that, we will wrap up and thank everybody again for joining us. We know that these are extraordinarily challenging and unprecedented times for businesses in Michigan and beyond. We value you sharing some of your time this morning with us, and know that you have a lot of important work ahead of you today. Know that we have a team of people at Miller Johnson who are working collaboratively with clients and community members and stakeholders to, again, help mitigate the effects that this COVID-19 epidemic will have on our clients and the community at large. So thank you again, and I hope you have a good day and stay healthy. Take care.
Thanks, everyone.